A sense of calm touches the local housing market with clearance rates up even though more houses went to auction. Prime Minister Anthony Albanese meets with King Charles III as the world prepares for today's funeral for Queen Elizabeth. And India and China pressure Russia to de-escalate the war in Ukraine. It's Monday, the 19th of September, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. What an amazing weekend. We had footy finals. We had incredible numbers of people lining up to pay their respects to the Queen. We had big geopolitical news out of India and China. We had plenty of economics. Cracking weekend. Good weather as well.
You know what else happened over the weekend?
What happened?
Sean? We received a review. And when you're talking about geopolitical things and all this, it suddenly feels very kind of self-centered to bring it back to a fantastic review that we received over the weekend.
No, forget what I said. Go on.
That's right. But self-interest wins. This is from a listener on Apple Podcasts. Has posted this with 5 stars, which is fantastic. Thank you. It says, Sean and Michael's voices have become part of our household morning routine. My favourite podcast for easily digestible, bias-free news headlines, all with an Aussie business focus. They keep me up to date and dodging any embarrassment at work when I don't have time to read the news. Also, how their tone is very calming. Thank you. Well, okay, I love the review.
I love this person.
Has your voice ever been described as calming before?
Screeching occasionally. Not calming though, no.
No, this is the complete opposite of every review I've ever had at home.
Yeah.
So I'm
very true.
I have printed this one up and I've put it up on my wall.
I might do the fridge magnet thing on this one.
That's right. And look, we appreciate all reviews. When I say all kinds of reviews, obviously we don't appreciate the negative ones.
No, constructive criticism is welcome. Just don't be too mean.
Yeah, that's right. But anyway, that's at Apple Podcasts. So please, if you want to share your thoughts, positive and slightly constructive, please do so. But we've got plenty to talk about, Sean. As you mentioned, there was a lot happening over the weekend, a lot on the schedule for today as well. You've got an interesting chat coming up after the show with he's almost a regular guest now, you'd have to say, Rich Newsom from Mercer, global investment giant.
Yeah, I love Rich. He's been in Australia. He normally is based in New York, and he's been in Australia for a week or so. And so he has a chat to us about how he sees global markets at the moment. Fantastic skill in turning economic and investment language into English, Rich.
Yeah, and perfect timing for it as well after the volatile week that we had last week to be talking to someone like Rich who just is across all of it. It is a ripper of a chat, but that's coming up a little bit later on. The main story this morning, Sean, the spring selling season kicking into gear and the numbers of houses on the market and the clearance rates are both rising. That's good news.
It is good news. There were nearly 1,000 auctions in Melbourne, up 18% on a week earlier, and the preliminary clearance rate was up to 64.4%. That's almost 2 in 3 houses at auction selling. In Sydney, there were close to 800 auctions, which was 10% more than a week earlier. Sydney's clearance rate was almost 61%, which was unchanged from a week ago. Across the country, there were 2,200 auctions, the highest level since June, i.e. it really is spring selling season, and the preliminary clearance rate rose to 62.5%. Now, in July, auction clearance rates hit 52% across the capital cities. The rate's now stabilised around 60% or just a touch above, according to CoreLogic. It just seems that the market is somewhat more neutral, and that's kind of good.
All right, so if the market's a little bit more neutral, kind of stabilising, at the risk of asking the obvious question, does that mean then that prices aren't really falling anymore?
Not quite. It just means that supply and demand are more in sync. Tim Lawless from CoreLogic told the Financial Review that more vendors were choosing to go to auction to ensure a faster sale and were more willing to meet the market's expectations. The time it takes to sell a home via private treaty, for example, has gone from 12 days to 31 days over the past 10 months, but the amount of discounting in that period has also risen to about 4% from less than 3% during the same period. Perhaps the interest rate shock since May are starting to fade, well, at least the shock part of it, but people's expectations on both sides of the market are just more realistic.
Have you noticed, Sean, in your local area, because I obviously watch what happens around us very, very closely, and now all the real estate agents, anytime a property is sold, it is always price withheld. now. There's no more kind of trumpeting of the record prices for the suburb anymore. It's all a lot more low key. There's the prices really aren't being publicized anymore. So that kind of lines up with what you are saying, that they are probably coming back a little bit and people's expectations are meeting more in the middle. Does this mean then that house prices kind of won't fall as much as some people have forecast?
The naysayers have been predicting falls in house prices of between 15 to 20%, possibly more in Sydney and maybe even more in Melbourne. That would be the culmination of higher interest rates and an incredible run-up in prices up until the end of last year. Prices in Sydney are down about half that level, more sort of close to that 5, 6, 7%, less across the rest of the country. Certainly the weekend's results provide some hope. Now, so too did the Reserve Bank Governor, Philip Lowe. He was at pains on Friday to tell a parliamentary committee that the central bank doesn't forecast house prices, but he said he wouldn't be surprised if house prices came down 10% as higher interest rates bite. If they did, he pointed out that house prices would still be up 15% over the past 3 years. The fact that he's talking 10%, not 15 to 20%, is somewhat encouraging.
Yeah, it sure is. How did local markets finish up on Friday?
The S&P ASX 200 fell 1.4% on Friday, or 96 points, to finish at 6,747 points, ending a pretty horrible week, really. About three-quarters of the companies on the bourse went backwards, led by the energy companies. Woodside and Santos were both down around 3%. The big miners also tumbled, with BHP and Fortescue dropping around 2%. The tech sector was really mixed on Friday. So the second best stock on the day was Computershare, up nearly 5%, while the tech leader, WiseTech Global, fell nearly 5%. Best on the day was The Star, which gained another 5% after a big jump on Thursday. Worst on the day was Atlas Arteria, following its $3 billion capital raise to fund the purchase of a toll road in Chicago. The banks were mixed. Wesfarmers, Goodman Group and Transurban all fell back more than 2%. Probably good last week's over, really.
And what about international markets? How did they go over the weekend?
Well, really, the whole week was pretty incredible. After figures showed a surge in prices in the US, stock prices fell all week. Bonds were sold off. There just weren't many places to hide for investors. Some commodity prices did pick up, as did the US dollar. But really, this is a very big week for global markets. So the central banks of the United States, the Central Bank of England, the Bank of England, and the Bank of Japan all meet, with the central banks in the US and England likely to lift rates possibly by 75 basis points each. That is a lot. Now, the Aussie dollar, as a result of all this speculation, has fallen back. It starts the week just above 67 US cents. I reckon the safest prediction for markets this week, Michael, is that there'll be plenty of action.
That sounds like a perfect prediction that will not get you into any trouble.
Exactly.
By the end of the week. All right, we'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has held a private meeting with King Charles III, and as is normal policy, he wouldn't reveal much about what was said, but he did call it a great honour.
Mr. Albanese said the new monarch was always welcome in Australia, and he pushed back on discussions of a republic. He hinted that the discussions involved environmental issues, including climate change. Mr. Albanese spoke to the King yesterday morning at Buckingham Palace, just hours after he'd made his way through Westminster Hall to pay his respects to Queen Elizabeth.
Now, you mentioned earlier in the show, Sean, the Reserve Bank Governor's comments on house prices. He really did have quite a bit to say on Friday, didn't he?
Sure did. Now, I don't think Phil Lowe is necessarily a born entertainer, but he was great on Friday. He really was. It was before a parliamentary committee in Canberra, and he talked about interest rates. He said they're still going up, and whether it's in 25 basis point or 50 basis point increments really depends on the data. He conceded that the deteriorating global economy will make it harder for Australia to achieve a soft landing. He certainly hasn't given up on that, though. He called on businesses to not gouge on profit margins and said that the unemployment rate could stay as low as 3.5% for a while. He talked about the number of banknotes in circulation and said he was unaware last year that former Prime Minister Scott Morrison had appointed himself Shadow Treasurer. He also likes increased immigration and greater skills training. Really was varied and wide-ranging, that chat.
Now, Sean, weekly reporting of COVID cases has begun, and it wasn't exactly a smooth start last week, was it?
No, it wasn't. It seems there's not a lot of coordination between the states on the timing of the data, even the definitions. I'm going to miss those daily numbers just quietly.
Well, especially for someone who focuses a lot on data. Any reduction in data is not a good thing for you, is it?
No, but to be honest, there's something a little bit more sentimental here. We started this podcast at the beginning of COVID. And for the first 12 months, sort of every day we were reporting the numbers. Now, everyone gave the advice, do not start a podcast in COVID, and we did. Would also like to say that we're one of the few to keep going.
I never picked you for the sentimental type. First, today's a day for shocks, really. I mean, so far we've had someone describing your tone as calming, and now we've emerged that you're a big softie.
As I get older.
Sean Softy Aylmer. Sean Marshmallow Aylmer, perhaps.
That's it. Yeah. Look, I mean, there is good news on this front, though, because COVID cases are definitely falling in Australia. And in fact, work absences due to respiratory illnesses, including COVID, are at half the 5-yearly average in Australia, mostly because of much lower rates of influenza B. According to the Financial Review, the latest data from Monash University's flu tracking report shows that absences from work or normal duties due to fever, cough and illnesses, including COVID-19, represented slightly more than 1% of workers this month, well below the monthly average of 2% for the period covering 2015 to 2019. So there you go.
There you go, indeed. Entrepreneur Trevor St Baker and coal investor Brian Flannery, Sean, have sold the Vales Point coal-fired power station in New South Wales to a Czech company for much more than they bought it for.
I'd love to know how much they sold it for. This has always been a fascinating story. The pair bought the power generator for $1 million, $1 million, from the New South Wales government in 2015. They revalued it 2 years later at $722 million. Quite the profit. No one is saying how much they sold it for, but it's likely to be much closer to the revaluation price and not the purchase price, shall we say. Vales Point provides 4% of power in the national electricity market. It had been due to close in 2029, but given the crunch in the electricity market, some analysts now expect it to stay open for longer. Brian Flannery and Trevor St Baker are very, very smart energy entrepreneurs. So I'm guessing they made a mozza.
Sure sounds like it. That is a ripper of a story, that is.
Sure is.
Now, there were media reports over the weekend, Sean, that BHP is considering raising its $8.4 billion offer for Oz Minerals.
That's right. Bloomberg is reporting that the new offer could come in the next fortnight. Oz Minerals rejected BHP's initial $25 a share offer in August, saying it significantly undervalued the company's growth prospects in coveted commodities like copper and nickel. Now, during earnings season, BHP CEO Mike Henry said Oz Minerals was not a must-have for the big Australian. Anyway, shares in Oz Minerals closed at $25.25 on Friday. That suggests investors reckon there's still a way to play in this takeover.
Okay, moving on to overseas news, and obviously it is a very significant day today with Queen Elizabeth II to be laid to rest later today after an incredible few days where hundreds of thousands of people have lined up for many hours to pay their respects.
For mine, Michael, a couple of the highlights were the grandkids undertaking the vigil of the princes. Did you see that, where they marched in and stood, head bowed in a sign of respect?
I did.
It's the first time that grandchildren have done that. I really thought that was quite a wonderful touch. Also, King Charles III and Prince William making a surprise appearance to thousands of people lining the streets of central London. I thought that was great too.
Yeah.
The funeral, 11 a.m. London time, is the first in Westminster Abbey for a monarch since King George II in 1760. It'll include 500 overseas dignitaries, of course, including Prime Minister Anthony Albanese and Governor-General David Hurley. It will be led by the Archbishop of Canterbury, the most senior figure in the Church of England. For the East Coast, the funeral starts at 8 p.m. You can see it on ABC TV, 9 or 7. Just as an interesting side point, 10 will be running normal programming.
Indian Prime Minister Narendra Modi has urged Russian President Vladimir Putin to seek peace in Ukraine at a face-to-face meeting. We mentioned this one at the start of the show.
Yeah, the relationship between India and Russia is much more civil and interdependent than Russia and most European nations, or Russia and the US or Australia. India is still buying oil from Russia, for example, so quite influential. Mr. Modi told Mr. Putin that today's era is not one for war. It came a day after China's President Xi Jinping made similar comments to Mr. Putin. Now, for his part, Mr. Putin said Russia would do everything to end the conflict as soon as possible. He also criticised the Ukrainian leadership for not wanting to negotiate a peace deal. the upshot of all this, clearly there's quite a bit of anxiety within China and India about what's going on. And that's probably good for peace prospects.
Yeah, I didn't realise the quite influential position that India was actually in this matter.
India is an incredible country. It manages to somehow have one foot in the camp of the West and one foot in the camp of the East, geographically almost as well. But it does have great relations with Russia as a good example. India-China isn't always best of friends, but it's a very delicate balancing act, and India tends to do it pretty well.
All right, now last one, Sean. This is pretty worrying. Southwest Japan is readying itself for a super typhoon, which could produce the strongest winds in decades.
Yes, residents have been urged to evacuate ahead of the typhoon hitting land sometime today. Meteorologists have warned of winds of up to 250 kilometres an hour and 600 millimetres of rain in a 24-hour period. Obviously, flights to the region have been cancelled, something to keep an eye on, but very, very worrying.
All right, up next is the Fear and Greed Daily interview, and our guest today is the man with probably the coolest title in all of global finance. It is Rich Newsom, the President of Wealth at global investment giant Mercer.
That is a pretty good title, hasn't it?
It is actually President of Wealth. To have president in your title is great. Yeah. To have President of Wealth, just like, wow.
I like it. And Rich is a great guy. Rich, as I mentioned earlier, was in the country for a week or so, and he gives us his take on what's going to happen in financial markets. We talk about the inflation figures in the US and what that means for equities and bonds and other asset classes. Really interesting guy, Rich.
Yeah, absolutely. And also, while you're there, have a listen to Fear and Greed the Week Ahead, featuring our resident economist, Stephen Koukoulas. Plenty of economic news last week in particular to pick over, and it's always worthwhile hearing Stephen's take on all of that. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 19th of September, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.